IRS Form 433F, Collection Information Statement. The IRS uses Form 433F to update their current financial information in your records to determine how either a wage earner or self-employed individual can satisfy their back taxes, their outstanding tax bill. So if you are able to establish an online payment agreement through the IRS website, you might walk through this form while you're doing this online. So going to the IRS website, you would go to irs.gov, click on I need to pay my taxes, select installment agreement. Normally you would submit IRS Form 9465, which is the installment agreement request, along with the collection information statement. You may be able to avoid this if you're able to make a large down payment. So the IRS will prompt you as to whether or not they need for you to submit Form 433F as part of any requested installment agreement or payment plan. So the form instructions also recommend that you keep a copy of your completed form and all supporting documentation. The IRS may come back to you after having gone through this form to request additional information. Like, for example, supporting documentation of your income or substantiation of any expenditures that you note on this form. So this is a 2-page form, and on the back of this document are the instructions. So basically, if you have any questions, you can actually walk through step by step. So we're going to go ahead and start at the top, and we'll just walk through. And I've kind of pre-filled some of this information. So name and address, John Smith, Anytown, Florida. Social security numbers on the top right hand side. If you're married and filing a joint tax return, you'll need to enter your spouse's social security number. Normally the IRS updates their information based on either your most recent tax return or any changes that you might inform the IRS in between tax returns. So if this is the first time that you've corresponded with the IRS since your tax return was filed and the address has changed, then you're going to need to check this box so that the IRS is prompted to update the records accordingly. You'll put your home, work, and cell phone numbers, and for your spouse. So we'll just put in phone numbers here. All right. Right below that, you'll enter the number of people in the household who can be claimed on this year's tax return. This includes you and your spouse. So if you're the only 2 people, you would put 2. If you have children, then you would add however many children you have. And then also make sure you document whether everyone is under the age of 65 or if they're 65 and older. And then if you're self-employed or if you have self-employment income, then you'll need to enter your business information, the name of your business, your employer identification number, what type of business you're in, and then the number of employees, not counting yourself. In Section A, we'll cover accounts, lines of credit, things like that. So if you have any accounts, even if they don't have a balance, you should list them here, but don't list bank loans. Include your business accounts as well as your regular personal savings and investment accounts. So you'll notice that a lot of different types of accounts. So PayPal would be considered a banking account, money market accounts, savings accounts, checking, online banking, anything that you use for your day-to-day money management. And then as you'll see, you'll need to use additional sheets if you have more than 2 accounts for your banking. And then, so for each bank account that you have, you'll need to outline the name and address of the bank or the financial institution, the account number, the type of account, the current balance or value, and then check whether or not this is a business account, or if this is, if you leave it blank, then it is assumed to be a personal account. Same with investments. You'll outline the name and the address of your financial institution. You don't need to put in any specific details. Your account number, so instead of listing every single mutual fund, you can write in that you have an account number, the type of account, and then whatever the current balance and value of that account is. You can also check if this is a business account, although most of your accounts probably will not be. So if you have an IRA, if you had a separate, say, 401k, then you would enter that financial information here as well. For virtual currency, like cryptocurrency, if you have Bitcoin, Ethereum, whatever, Dogecoin, then you would have what's known as a crypto wallet. And if this does not apply to you, obviously you would skip, but for every type of virtual currency, you would enter the name of your virtual currency wallet. So my virtual, and then whatever your email address is to set up. So I put in my work email address specifically to see if there was a limit to how long your email address could be. It appears that there is a limit, at least on this form. However, you may find a workaround. So just be careful of that. And so you'll enter the location of your virtual currency. So is it online? Hopefully you didn't have it at the FTX exchange or some other place that can get hacked. Mobile wallet, a lot of people have their wallets either stored on a mobile device or some sort of external hardware. And then how much do you have? So if you have, so you're going to have to put 10 Bitcoins at whatever today's dollar amount is. Except I cannot use does not seem to let me go. So there is a limit to how many characters you can put into that space. So you can't even fill it out the way the example holds you to fill it out right here. So you might have to come up with some sort of abbreviation. And again, the IRS, upon examination, probably is looking at things a little bit bigger picture than whether or not your Bitcoin is still worth $64,000. So, all of this is a snapshot in time, and by the time your paperwork gets processed, all of these values could very well change. So in section B, we're going to outline real estate. So if you have a primary residence, you would check this. You would write right, and then whatever your mortgage payment is, it's just assumed that everything is $1,500 a month. I bought this, I'm just making up numbers here, 2010 for $150,000. Current value is $400,000. My balance owed is about $125,000, so that means my equity is $275,000, right? And then if you had multiple, if you had some other, like a commercial building or a vacation property, timeshares, land, whatever, speculative real estate, then you would just go through this. In C, you're going to list major assets. So this could be cars, recreational vehicles, boats, airplanes. It could also be things like a whole life policy, where whole life insurance, you might have accumulated cash within your life insurance policy. And not necessarily a term life insurance policy, but for whole life, variable life, variable universal. A lot of permanent life insurance policies will have a cash component or an investment component that the IRS wants you to report to them. So in this case, we'll assume that you have a car. Sorry, I keep mixing up Forrest and John, so we'll make this John's house. My name's Forrest and John does not exist. Unfortunately, I can't retype this, so we'll just have to leave it like that. So John's car monthly payment is $500. I bought this in 2020. My final payment, let's just call this will be due in 2025. Current value, we'll call it, and I owe $10,000. So we'll say that the equity is $5,000. Not necessarily, that the IRS is going to make you liquidate your car, but the IRS does want to take a look at all your assets. So we'll put John's insurance policy. We'll say it's a $300 policy. He locked in a pretty sweet deal back in 2015. He doesn't have a final payment. He's just going to keep paying this off. Well, actually, life insurance policies might have, a down the road, whenever you turn a certain age, kind of limit. We'll just say that John doesn't know that right now. It's $10,000 of cash value. He doesn't owe anything on it. There's just $10,000 of value. So now in section D, you're going to list any credit cards, any lines of credit. This could be a home equity, even though it says credit cards. Specifically, you're talking about any outstanding lines of credit, right? So let's see, John's, Visa. Let's see, the credit limit, let's call it $20,000. Even if you have a zero account balance, the IRS still wants to see how much your credit limit is, right? So let's see. I'm trying to think of personal line of credit. He could have a line of credit at his bank, and even if it's zeroed out, the IRS still wants to know about it. Now, if you have a business, then you're going to need to complete section E, and the IRS breaks this down. So section E1 is your accounts receivable. So this is money that someone owes you or your business for services or for goods rendered. And the IRS will want you to list out everything. So all accounts receivable for your business. So let's just say John's customer, once John's customer pays his balance, that's $10,000 that John will have access to. If you had additional sheets, you're going to total everything up, and let's just say that John has $100,000 of accounts receivable. Then you have to determine how much of that accounts receivable is available to pay the IRS now. So, how much could you reasonably expect within the near future? So If they're owing you money, that's one thing. If they've paid and it's going to take a day or two for the money to uh, you know, clear your account, then you might consider that, part of your accounts receivable that's available to pay the IRS. So we'll just assume that all of this money is outstanding. John's been sending invoices and he's following up, but no one's really promised any action. So if John accepts credit cards, then you'll put the merchant information for any credit card payments. Basically, if you're a payment processor, then you would enter credit card information, the issuing bank and name and address, the name of the person on the account, and then the merchant account number. If this doesn't apply to you, then you can skip it. We'll just pretend that John's in a business that is cash on the barrelhead. So no credit cards accepted. You'll fill out your employment information and John's employer, address here, and then how often are you paid? So by the way, we're filling this out because in addition to John's business, he also has a 9-to-5 job. So the biggest difference here really, you should know weekly and monthly, that's fine. But the difference between biweekly and semi-monthly is a very often confused distinction. So semi-monthly is twice per month. For example, in the military, service members are paid on the 1st and the 15th of the month, regardless of how many days in that month. Conversely, biweekly is every 2 weeks, whether or not it falls in line with the monthly schedule. Some biweekly schedules might have 3 pay periods in a 31-day month, and that's perfectly fine because if you get paid on the 1st, for example, happens to be the Friday that you normally get paid, then 2 weeks later would be the 15th, and then 2 weeks after that would be the 29th of the month. So if you're in the month of March and your payday falls on the 1st, you can expect to get 3 payments in that month on a biweekly schedule. Whereas with a semi-monthly schedule, you would only get 2. The difference in the math is that when you do a semi-monthly schedule, there are 24 paydays in the calendar year. 2 per month, 12 months, 24 paydays. With a biweekly payment schedule, there are actually 26. So there's 2 extra paydays that sneak into your payroll schedule for biweekly payroll instead of semi-monthly. So we're just going to say that for simplicity's sake, John gets paid monthly and he gets paid, I don't know, $8,000. He's paying $1,500 in tax. He doesn't have any state or local tax, and he's been at his employer for 10 years, so it appears that his job is pretty safe. You can do the same thing for a spouse, and you would walk through that as well. Now, in Section G, you're going to list all household income that is not related to wages. So if you're receiving alimony, child support, self-employment income, so on a net basis, how much you're paying yourself after taxes and expenses. Net rental income, unemployment, pension, interest and dividends, Social Security, and then other forms of income. So we'll just assume that, let's say John has a $1,000 a month pension. John's lovely spouse is receiving some money for alimony, but they don't have any children, so we're going to leave that at 0. John's able to squeeze out $500 a month as his business is getting started, and that's about it. Now, in the monthly living expenses, the necessary living expenses, this is where you document how much you need. And most likely what you're going to be doing is, Sorry. Let me go back up here for a moment. So we've got the payment schedule correct. Now you're going to calculate your monthly expenses on. So you're going to have to provide an estimate on food costs, housekeeping supplies, right? So most of this, the IRS has tables that basically provide allowances for what they would allow. So when you put your monthly expenses, the IRS is going to come back and tell you what they think is a reasonable amount for monthly living expenses, because they want as much money as possible going to paying off your tax debt, but they also want to make sure that they don't go too far. In the form instructions, you might come across a bill. Let's just say, let's pick something that might. So with term life insurance, you're not paying this on a monthly basis. You're paying usually an annual premium. So let's just say your premium's $2,400 per year. You're going to have to do the math to break that down into $200 a month. Child independent care. If, say, John was paying child support to someone else, that's where you would put this information. So you're going to complete this. And if you pay a bill, say, quarterly, there's going to be a table in the form instructions that say if you're paid quarterly, then you divide that by 3, just like we divided this by 12 over here. If you're paying a bill every week, then you're going to not multiply by 4, actually multiply it 4.3. So let's say you go to the store every week to get groceries and you're spending $100 per week. So you would actually multiply that by 4.3 to come up with $430 monthly food. Biweekly is 2.17, which is roughly half of this. And then semi-monthly would be, you would just multiply this by 2. So if you're spending, say, $50, twice a month for housekeeping supplies, then that's $100 a month. And then under this, you sign it, your spouse signs it, and you date it. And you're going to submit this form to the IRS. Either in response to a letter, or you probably should call the IRS revenue officer for additional information. If you're applying online, the website may very well kind of walk you through and provide additional guidance. So this collection information statement is largely a starting point for probably further discussion. But again, the purpose is to get a snapshot of your current financial situation so that the IRS can either approve, adjust, make modifications to your proposed installment agreement. They might also, if, for example, you file a tax return with a significant change in income, they might ask you to complete your Form 433F, even if you've been making payments dutifully under an installment agreement. They might come back and ask you for updated financial information to see if they can make a modification, which the IRS has certain rights to do. So they can't do this unilaterally. They'll likely do this when they pick up on a change in your financial situation that might reflect a change in your ability to pay down your tax debt. So that's all we have for this form in this video. If you want, we've created an article that takes you step by step through everything we just discussed. You can find it on our website, teachmepersonalfinance.com. Simply type in Form 433F in the search bar, and this article should appear. As a cautionary note, there are several Form 433s, so specifically look for 433F. For example, 433D is a completely different statement. So Make sure that you're looking for the right form so that you can pull down the right article. If you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel and tell your friends. If you have any questions, please feel free to put them in the comment section or reach out to me via email. Thank you very much and have a great day.